Gen Reviews, honest and in-depth reviews across all genres. We're a go-to hub for comprehensive product and media reviews. Please visit www.genreviews.online. We are going to see the last week trading recap. The last week means we're going to see the 4th November to 8th November. In between the 5 days, what are the trades we have taken, and how it went. It went in the profit or it went into the loss. That kind of recaps we are going to see. Totally out of 5 days, I did only one trade last week on November 7th, which I got $50 profit. And 2 days I was out of office on November 5th and November 8th. And November 4th and November 6th, I was in the trading table, but I couldn't take any trade because I didn't get any proper setting to trade. So apart from this week, let's say the last week, the November 1st, that is Friday, I took one trade. That is completely a disaster. You can see here. I took the reversal trade of the short trade I took, but it went to loss around $1,425 loss. Let's see why this trade went to loss. Because in the trading, we have to trade the plan, as I mentioned here, trade the plan and the plan the trade. The bad, it is everything in the trade. You have to trade the plan before when you go to the trade, and when you are going to trade, you have to execute the trade whatever you planned before. So if you did mistake in this one, then you'll collapse. So that's what I collapsed in this trade which I took on November 1st. So let's see what mistake I did. Actually, normally I'm trading on the US market, on CME exchange, on futures only, E-mini S&P 500. The contract expiry is December 31st, 2024, and let's see how how I prepared my days before the trading days. This is my initial hypo in the sense. This is what I'm preparing even before every trading days. My contextual hypothesis is, as you can see in the market profile, the primary expectation is this, which is I mentioned in number 1, and the secondary expectation is which I mentioned is number 2. If you see in this the chart, profile chart, these are the cumulative deltas, and this will be my chart view of chart. So as you can see, based on the market profile, my primary hypo was let's say in the live session, if the price went below this CVF5 and give the acceptance, then it will go to the the clearly I mentioned here. If you see here in the hypo 1, if the price approaches the CVA5L and sellers to control them, then the possibility to balance at prior day value areas, even possible to reach CVA1. The prior day value areas in the sense of these areas, and the CVA is this area. So that is my primary hypo. That means I'm looking for the short if the price goes below. That is my primary hypo. And my secondary hypo is if the price approaches CVAL and give the breakout pullback, then possible to imbalance it to CVA6. That means if the price approach this line in the sand, my line in the sand, and give a breakout and give a pullback, then it will possible to go to the CVA CPA 6, which is in the above of CPA 5. So this is my contextual hypothesis. These are the events, like let's important events which happened in that day, like 7:30 average hourly earnings, non-farm payrolls, employment rate, and S&P global use manufacturing PMI, ISM manufacturing PMI, ISM manufacturing price. These are the major events which has happened in the US market. So which I got it from investing.com. Why I'm keeping these things means uh, um, to get the overall idea of how the events results are there. Let's see here. There are three categories of the actual, focused, and previous. So these are the values we are getting in this news release. So basically, to avoid this to avoid the trade in this particular uh, time, and how about the feelings of the market, to identify these things. These are the things very important for when it comes to the trading. That's why I'm keeping this calendar. These are my risk managements, uh, and these are entry probability questionnaires, because I will question myself whether I have to enter into this trade or not. If I get this 70%, more than 70%, I will get into the trade. Then these are the risk and trade management I'm keeping in my trading log. Daily loss limit is 27 ticks. Daily trade limit is one. Respect the stop. Don't trade until 9 o'clock. 9 o'clock in the sense, if you see the particular day, these are the in 9 o'clock. There are one event is the rise in manufacturing. So after that only I will trade. Before that I will not enter into the trade. That's why I'm keeping don't trade until 9 o'clock. These are the lesson learned when I took wrong trades. Then these are the time stamps, how the market feeling in the particular time, and how the market is feeling. How I am feeling based upon the market. So these are the things I'm writing down here. And okay, let's come to uh, the trade which I take into the that particular day. Actually, as I mentioned earlier, the overnight market condition was imbalance up with zero point 0.5 to a vwap rhythm. That is exactly just a moment. Exactly when the real trading session opened at 9:30 US time. It obeyed the same rhythm, and it took. So it confirmed that its market is going up. So I didn't uh, went into the trade because my hyper was short below it. So I was waited uh, some time to if the price comes down to my list, then I may then I thought, okay, we can take some decision. But the price didn't come down to my level, so I didn't trade. Then it took again continuously the fast and the uh, rhythm from vwap to 1st. Then it took again, it meet the cvfi high. So it's completely it was a non-tradable day because my hyper was short, because the market accepted above the CVA, which is CVA sorry, above my lease, which is CVA 5 L here. So it took the pullback and it flies to reach the CVA 5 high. So it is clear. So in that particular day, um, um, I have to avoid the trade. But uh, what I did, okay, I thought, okay, my trading area is here. My trading area is was here. If the price come, I can place somewhere here. But as again, the price it went and rejected, and the same rhythm area, it's breakdown. Then I thought, okay, the rhythm was broken. Okay, let's try for the pullback entry. Then it's broken and touch the CBA5 POC. Then it's clear the rhythm has been broken. The rhythm has been broken. So okay, I will go for the pullback entry. Then it gives the pullback again, the confirmation. Then I go for the short here and shut here and put my stop here and summer here, and projected my first profit on the vwap and the second profit on the other side of the rhythm, which is maybe somewhere here. But the thing is, we have accepted inside the CBA 5. So then immediately the buyer came here. As you can see, the initial buyers are here, and suddenly the huge buyers came here, and they completely smashed out uh, my thought, and I got stopped out. So then stopped out. So I thought, okay, we may have the pullback until the CVF5 high. So then in this particular second trade, I took again and put some stopped just 26 ticks above. Then immediately stopped out. Then again after saw this. See here, there is no buyers over here, and okay, I thought, okay, possible. As you can see, the sellers came. Then I put my third entry over here and put the same stop over here, and I projected my first take profit is a VWAP, and the second as a CBA 5 low, but no luck. Immediately I stopped out. So as you can see, because of these mistakes, uh, I supposed to obey my trading hypo. Whenever the price goes down below the CBA 5 low, that is the area of CBA 5 low. If we give the pullback on the CBA 5 low, then only I entered in. I supposed to enter into the trade. But what happened? I didn't obey my trade plan, and I went the short here in these areas. So it is completely out of my plan. So that is the main, that is what happened because of this reason. So that's what we always obey our plan, and we have to go as per our plan. If something missed, okay, live the day, and shut down your computer and go out. We may have a better trading day tomorrow or next week or next month. So that is the thing. I just want to tell you, uh, we have to obey our plan, and we have to execute our trade as per our plan. So see, on that day, how much it it's almost 1425 loss. Anyway, it is not my evaluation account, and as well my personal account. It is a sim account only. Anyway, but still, the trading is trading, whether it is loss or profit. See how it is. Let's see. This was my hypo. What I have written here. This was my hypo. This was my expectation, and what happened in that day, as you can see below. See, the price, it's clear up. It went based on my secondary hypo, because my primary hypo was always I go for my primary hypo. If I didn't get the primary hypo trend on the price on this particular day, I will not trade. But I took the trade. That's the mistake I did on the particular day. It cost me around thousand more than $1,500. You see, it accepted inside the CBA5 and give the pullback and reach the CBA5 high, then rejected, the got rejected. Then finally, after some later in the session, it came down. It came down as we expected. But the thing is, even it doesn't give any trade opportunity below it as per our primary hype. So these trades are avoidable in the sense, we had to avoid the trade on particular day, but we took the trade and we paid for that one. So what I'm trying to say, plan the trade and pay the plan. That's it. On November 7, which give me some $50. That is my evaluation account, Bullock's evaluation account. So let's open that one. It's clear, and my CBA, DVA, and order flow value migration was down, and line the Sunday's prior day value area high, which is 5,947.5. And this was my contextual hypothesis on that particular day, 7th November. And this is my primary hypo, even, and secondary hypo is short. This is the primary hypo. You see in the primary hypo is if the price approaches the prior day value area high and pays to control the possibility imbalance up to touch a new all-time high. You see, if the price come to this prior day value area high and give the buyers to control the market, then it will go to the all-time high and break it up. This is my primary hypo. And the secondary hypo was if the price approaches the prior day value area high and select to control the possible balance between the all-time high and prior day B to C. This if the price come down here and give the sellers to control, it will go the prior day POC. This was my hypo on that particular November 7th. Yeah, it is FOMC day. Normally FOMC days are very volatile days. So that's why I mentioned don't trade until at near 8:30, 14 or 14:30. But I obeyed this one. Let's see, these are my probabilities I got on that particular trade. Probability 70%. So then I that's why I entered into the trade. Let's see the recap on that particular day. As you can see, the price at ETH session was accepted above the PDVA's US president election result in favor of Donald Trump. Also, MC was imbalance up with vwap rhythm ST. Price may drop until vwap again and continues the imbalance market condition at RTH session until it's scheduled at 14 later today. My bias was long as we were trading above the MRCBA. Not only that, market was strongly bullish due to Trump's election victory. So I was looking for a long above the list, which was prior day VAH, which is this area. Which is this area. During the RTH session, the price was sustained the imbalance up MC, but speeded up with 1ST. As you can see, speeded up with 1ST from zero point 0.5. It went to the first trend. Huge selling happened when the price hits the imbalance rhythm, but unable to take the price down. If you, as you can see these areas, huge selling happened, but the price wise, it couldn't make down even the previous low. This hinted me that all the sellers got absurd. So I jumped in with my plus long contract, two contract of long exactly at honesty rhythm, imbalance rhythm. Here I entered with 1ST stop below. 1ST in the sense my stop was here in these areas, and my first TP is near here, high of the day, here, high of the day, and the second TP is here, somewhat here. But I had exited in one contract in this particular area because buyers struggled to push the price high. So I took off my one contract here exactly here, and after Sai buyers struggled to push the price and moved my stop to here B, kept my second TP as it is. But somewhat I exited my second and last position when the price reaches high of the day again. This area I exited all my positions as as you know we are trading almost all-time high. As well as I was obeyed my fifth point of risk and trade management. Uh, don't hope for the big profit at the all-time high. So I obeyed my at that point and exited all the positions. Anyway, this was my first day of 50k max challenge. So I closed my trade with a small profit, $50 profit. So this was my uh, last week trade recap. So if you can see the last week trade recap, I traded only one day. I got $50, and I sit on the trade desk, but I didn't trade for 2 days because I didn't get any proper setup. So editing took 2 days. So only three days. 2 days I was out of office. So 3 days, and out of 3 days, one day only I took trade. So finally, what I'm trying to say, trade the plan the trade. Thanks.